Hi everyone, thank you for joining our monthly assembly this May. So we'll just kickstart right now then. So like I said, for this presentation or for this webinar, so like I said, I changed the slides here and there slightly because of the whatever that happened in the past few days. If you are lost or if you have question of with any of the content, please stop me and just shoot me the question. Or if you try stopping me, if you can't unmute yourself, just type on the chat. I open the chat window, so I will monitor that accordingly. So yeah, so let's get started then. Okay. Yeah. So we I need to start with this disclaimer. So in terms of any result that we show in here or any or also like any content that prepare in here is all for education purposes. And of course, anything that we share in here, you need to do your own due diligence. Please use your own best judgment before you making any investment decision. As of course, this all the investment decision will affect your money. So by watching this presentation, as I explained, we didn't consider any of the also like your personal financial situation or doesn't mm, consider your personal objective as well. Of course, at the end of the day, any outcome that you taken from this investment or like this presentation is any outcome that come from that is you are fully responsible for that. All right, so we'll start a typical process. We'll start with the market updates, right? I know like it's not just happening in the stock market, it's happening in other markets as well, and people start screaming out loud, right? So, and I'm gonna explain a few things. I'm gonna try to connect the dots, and I will explain as much as I can today, right? So if you see this S&P 500 in here, so I will say like dropping from the top is roughly around like 4%, right? So this is what happened in the past 1, 2, 3, 4, 5, 6, 7, 8, 9. Also like the past almost like 2 weeks. So I know it's a big drop. I would say like from the top to the bottom, it's dropped roughly around 4%, right? But I know because of the news and everything, it looks like it's such a huge drop as we got into like what we call like bear market and everything, but it's not that big, right? If you look through the chart, and I know in terms of the daily chart, it looks quite volatile. So you can see up and down, like it's been I would say like roller coaster, especially this year. And however, if you look in terms of the chart of I would say like a weekly chart, it looks pretty smooth, right? This is like literally from like 2020. So pretty much is we can see a lot of green. So that means like the momentum is going up is pretty much um it's a lot more than compared to daily. And of course the drop still pretty much I'll say like from the top there into I'll say like bottom there even current stage is roughly around 276%, right? But however, if you think look at it as the year to date, also like year to date means like from January until now, the performance of the S&P 500 is also like been doing amazingly well. So if I know like a lot of people mention, hey, the average return of S&P 500, which is roughly around like 7 to 10%, right? And of course, like this is like halfway through of the year, then the also like S&P already break through that average. So overall market S&P 500 is doing amazingly well. So if we, I think the all also like this is the next slide, which is also like the poster child, also like some this is the QQQ, this is the index that tracking all the technology sectors. So these sectors outside is one of the sectors that creating a huge boom during the COVID, and of course now it's become like quite big news recently, right? The in terms of the QQQ, the this index, the from the top, oops, my bad. From the top to bottom, roughly it dropped roughly around like 5.78%, right? And of course, it's not as big as we thought as well, right? In the last webinar, we mentioned going to expect roughly 10% drop, right? Because of the earnings and everything. And of course, with that, the recent the inflation and bunch of other stuff, right? The increased income, not income tax, the increasing of the corporate tax and everything. So I'll say like roughly we expecting drop of 10%, but this is apparently it's drop max. I would say like now it's like what's that 6%, 7%. So pretty much overall it's not as big as we expected, right? And like I did mention, this is just a daily chart. If you look as a weekly or overall terms is also like QQQ doesn't look that bad. But if you look the year to date, of course, they are underperformed through the average. So currently the year to date is only roughly around 4.29%. So it's not as also like it's not as high as expected from the other investors, right? So hence we can also like we start seeing like a lot of turbulence or also like a lot of noise in the market with the news and everything. And if you think about it, QQQ is the technology sector. This is where we start also like a lot of growth stock in that index, right? And in terms of that index per se, if people can't see the growth as they expected, I would say like that does they didn't see the double digit return and everything with this index, so people start worrying what we call like the economic growth, right? So this is what recently happened in the past. I would say the news in the past 2 weeks, right? So this is in terms of the overall year to date stock is still positive. Year to date is like QQ 4.29%. So this is probably jumping quite ahead. So for a lot of our students that also like a lot of their position in the technology sectors, and of course we're using options, right? We're using call option and everything. Even though we do booster, which is the in the money call, we still have what we call like time value, right? I think the worst part with holding a lot of option is the time decay. The time value is decaying, right? And of course, we our option is expiry around like January 2023, which is almost like almost 2 years, right? 1.5 years away. The time value is still going to decay. So if you, I think some students, I think 3 or 4 students that contacted me, some of their position not as perform as good as S&P 500, because if the market going sideways like this, the time value is decaying and everything, your option value is decreasing, all right? So this is probably like way ahead of like my presentation. But of course, I'll touch on why it's going sideways and what's the worry and everything. But before we go too far, we'll go through this first. This is what we call like a fear index. In the last webinar, also like roughly around that April. So remember I mentioned the fix is around 17. This is really low. We should start seeing. I'm kind of expecting it going to go up with the earnings and everything. Yes, it actually is. This when I checked today, it actually like yeah, this is when it was before, right? So I'm just pointing in here. So if you look the chart quickly, it's literally we almost like peak at the bottom and it does bouncing back up. So it's not like jumping crazily like a previous COVID, but we should start seeing it creeping up into like 25 or 26 range. So for people that done our moneymaker course, which is when we're doing cash flow, the higher this fixed index, which is the fear index, the option value is going to be more expensive. All right. So when the option value is more expensive, this will start not creep, it will start creating another opportunity when you doing a cash flow position again. So when the option is high, when you're doing cash flow, you receive higher premium. Make sense? All right. So so also like in the previous months, a lot of our students, even me, we start adding what we call booster, because the option when is the fixed index, the fear index is really low. The option price or the time value tend to be very, very cheap. So that's also like still a quite good opportunity when we adding a call option. Right? So for in general terms, fixed also like fixed is which is the fear index. So if it's low, that means it's not much. Also, like worry, it does people not really fear about the market correction and everything. But if it jump high, that means people scare the hell out shit of them, right? With the stock market correction and a bunch of other stuff. So overall, also like the fix itself still doing okay. It's not as bad as profit time, right? So yeah, so as you aware, like a lot of news in the past, I would say like a month or 2 months, or even like last early of last year, and even December. So we start talking about what we call like inflation, right? So before we go too deep, I'm gonna explain what's inflation, what's the effect with our market. So please stop me if you lost, because we're going to touch a little bit around the macro, which is the macroeconomy. But yeah, so in the past few also like weeks or months, the recent drops and everything, uh, the news is saying like, hey, it's because the drop because of is inflation worry. Inflation is really high, and I think the recent release from US, which is CPI, Consumer Price Index, and it's also like is big surprise for a lot of like analysts, right? Because they estimate the CPI, which is the inflation, around two something percent, but it jumped up around like 4%. So people say, "Oh my God, inflation is so high," and I couldn't say like we didn't expect that. I think it's really expected. I'll explain why. But before we goes too deep, so I'll explain a little bit what is inflation. So this is something that I got from Investopedia. So just briefly, inflation is just representative of the price increase, right? For anything, it's not. This is just example of coffee, but the cost of goods or services or things that you even like assets and everything is increasing. So anything that you want to buy, the items and everything is become more expensive, right? So indirectly, the value of your money, your purchase power is not as strong as before. Makes sense? So if you can see that in this picture example, the same coffee size and everything, but the cost of the same coffee size and everything is costing more and more. As you can see, I would say probably people in Sydney, coffee actually getting more expensive. I used to buy coffee in Surrey Hill roughly like a 350 or $4 max, right? Now it's like everything's right close to $5, right? So that's an indirect example of inflation. So now I want to go through a little bit details on what actually caused the inflation in the past. It's like almost a year now, right? The stimulus when the government injecting the money, when they also like printing with the money, this is increase the money supply, right? So what happened with the increasing the money supply? That means people has more cash to spend, then they keep spending, right? So when they have more money and they keep spending, indirectly will push the price, things that out there, like the items and everything, the goods or services, start going up, right? And so, and the other things is of course supply and demand as well. The also like when Joe Biden got elected, I did mention if the new infrastructure initiative kick in, we'll start seeing a lot of booming with the infrastructure, like construction, property, and everything. So that's actually, I believe in December he kicked in that initiative and everything. Even like until now, he's kicked in another initiative around infrastructure, building stuff over the and plus COVID helping that as well. It's just using that as an excuse to, hey, everyone's still working from home and everything. So it's creating an opportunity for us to build the infrastructure. It's not happening in US as well. It's happening in other country, even in Australia. So the other things that cause inflation is remember like there's a demand with the infrastructure, and plus we got a low supply on the community, right? And there's huge demand on infrastructure. Remember supply and demand, right? If there's low supply on that community, that means people gonna fight for it, right? Because people fight for that supply for that community and everything, and it will indirectly cause the price. As I like just giving example, lumber, oil, and copper and everything, they increase the price. So indirectly, it will this inflation it caused a kick in from the stimulus, the infrastructure initiative, the low supply not just in the community, of course, low supply in the food area as well, and it's creating what we call a domino effect of this inflation. Right? And and if you see this chart briefly, you can see that clearly. So this is what we call like a federal government finances, right? This is the red line. Sorry about the not that great quality of a picture. So, but I think you can see that briefly. Yep. So spending in here, you see that when the government actually injecting a lot of money and a lot of infrastructure and everything, you can start seeing like during the COVID time is literally jump crazily up, right? So the government will do a lot of spending, but however, if you see the revenues is been dropping, right? So there's some company or like small business and everything's went bankrupt or liquidated, and some of the export import doesn't actually works, so it's been stopped. So the revenue is been dropping. Then of course, like for them, one of the things to stop reduction, I will say reduce the inflation is one of them is by reducing the money supply, right? But I'll probably say it wouldn't. It's not something that will I would say like Federal Reserve think of as well, right? Because if you start reducing the money supply dramatically, you will start seeing what we call like slowness in the economic growth, and it will create panic, especially with the still with the COVID times and everything. Will create panic to the market. It's the least things that the government will do. And of course, the another things to increase the revenue is by increasing the tax. So if you see the news in the past 2 days, the corporate tax is increased, the income tax increased, and pretty much all the taxes in the US is increased. So it's one of the mechanism for them to increase their revenue to match their spending, right? So I did mention in terms of the current inflation, you can start seeing like the lumber, which is the wood and everything, and some of like even like oil energies area and energy sector and everything start increasing. So if you look at that, right, lumber is almost like triple digit and everything, soybeans and everything's oh no, yeah, soybeans increased. No wonder my coffee is expensive. All right, soybeans increase, and I think pretty much coffee prices increase as well. So, but if you look into this, right, a lot of things like commodity and everything's increase, like the prices increase. A lot of company out there, they're forced to increase their prices. Coca-Cola increased their price as well. Not just Coca-Cola. I think McDonald did that. Pretty much a lot of company out there, they will increase their prices. So I did mention to some of our students, stock market is also like one of the best tools or like vehicle to fight for inflation. So if you think about it, right? So if a lot of like price, the commodity and everything is getting more expensive, so as Ida asking why is gold going down. Ida, I'll come back to you soon. Yeah. So if we look in terms of the company, right? So the company when they got the commodity prices increased, that means the expenses increase, right? Of course, they wouldn't absorb those expenses. Either they're able to increase their profits quickly. If they can't, the easiest also like the easiest way either like cutting costs, which is cutting the employee or like other expenses and a bunch of other stuff. If not, they will be able to pass it on to the consumer, which is they increase their prices. So if you start seeing a lot of like services and everything, they increase the price. So of course, for the company, I would say like if we seeing high inflation, the company, the stock market and the stock market, which is the all those company, will try to fight it by passing on that prices into the consumer. Make sense? Uh, Ida, talking about gold. So if we the gold one is also like pretty tricky to explain. Um, in terms of the current inflation and everything, people not looking the gold as a safe haven as before. Also like when when let's say 10, 20 years ago, when we start seeing the market worry or like there's a war or even like the market panic and everything's gold tendency to go up because and that's one of the way to fight inflation. But since the US not pegging with the gold and everything, so you start having that decorrelation between that US dollars and that gold. So whenever that there's an inflation, gold not increase as much as before. And the other things, people start seeing the other so like people start seeing more opportunity on the other places. Just giving example, consumer discretionary, which is the company that paying dividend or like consumer defensive area, that's also like the area that will start have more increase because they will pay dividend and also like people more educated now. When you invest into those company, rather than holding the stock which is gold, they can buy those company and they still got the dividend. Make sense? So people start able to understand where they can put their money to and a lot because of the previous also like since that 10 years since that GFC, a lot of our baby boomers and everything's looking bond, which is the term deposit and everything, as the safe haven compared to gold. So if you see that like a lot of stock investor invest in consumer defensive sector and a lot of like older people invest into the bond. So hence not many people invest into gold as much as like 10 or 20 years ago. Okay? All right. So in terms of the inflation wise, I would say like it's not as worse as what people say. If of course like general trend like the outside in this since like 2003, people when like these people tracking them, the trend is around like roughly 2%, right? And of course like it does jump a little bit 4% and everything. It does happen in previous years during that prior to GFC. And this is what people worry, right? People say, oh my God, it might happen like GFC. People will get like so high with the inflation and we will seeing the recession of cash. But I'll probably say before that getting into worry state, we still have a long way to go, right? I think before, of course, like government doesn't have the tools and the company not aware with a lot of this debt and everything. But nowadays, a lot of company getting better with managing the debt and managing the way, of course, like managing passing on that inflation and everything to the consumer and everything. So it's in terms of inflation wise, in terms of the stock market, I'd say like it shouldn't be as bad as probably like in here. So we wouldn't see that will be like so like CPI roughly around like 6 or like around 10%. We wouldn't see that happening, right? So probably next question, why investor worry, right? So I did briefly mention some of the way to reduce inflation is first is reduce money supply, second is the increase the tax, and the third which is the increase interest rate, right? So I'll explain briefly. When they reduce the money supply, probably is hard to do, and increasing the tax um, is probably like we already saw the news and probably expected. So this is one of the easiest way to increase the federal revenue. The increased interest rate probably also like the last resort. I'll explain why later on. So if you see this back to this chart again, right? Remember the revenue is still not that high. The easiest way for them to do is to increase the interest rate. So this is what happened in the also like in the past few days. Janet Yellen really pushed that higher taxes and everything, and it does push into the not just into the Federal Reserve and everything. It does push into the all other unions with the way the job market and everything to start increasing the higher taxes, right? So that's we'll start seeing that ball rolling very soon, and we'll start seeing more impact on that one. The tricky part with the higher taxes, that means this is probably the risk as well, right? The company, a lot of the company will have less money to spend because they need to save that cash to pay for the taxes. Remember, so if the government increase the tax, the company have no choice to actually pay that taxes, right? So they need to be ready for that. So that means they're not gonna spend too much. They're gonna by not spending too much, that means the inflation will be reducing, right? So the other things is why other investor worry as well is because this is about increased interest rate rising. So I got this very nice chart that this one guy that did it. So by having the high interest rate, that means your loan and everything, the cost of borrowing is increased. That means higher mortgage payment for the lot of business that got a loan with the mortgage amortization and everything. That means they need to pay more expense on their properties, right? And or like their offices or their factory and everything, and of course like it will cause the other effect, right? People, a lot of company wouldn't like use that money or like having more loan to buy other investments. So you will start seeing acquisition, merger and everything probably a lot less compared to five in the past 5 years where Donald Trump's have probably is very low corporate taxes. And yeah, and of course the tricky part, which is we might see the house prices is dropping and everything. Also, like something that the government, especially in the U.S. government, want that to happen, right? Obviously, like they wouldn't want that to happen. So that's why like this is probably like last resort if that happen, right? And by doing increase the high interest rate and everything, you will have less money supply out there that people, a lot of our retail investor or like older people will start putting more money into the bank, right? They want to get that higher interest rate. So yeah, the will side effect is we have the lower economic growth, but of course it will um, help the government to get into that what we call like lower inflation. Cool. So there's a few sectors I would say like that will get a benefit when the interest rate is actually increasing, right? Financial sector, I think in the December we mentioned about the banking and everything. We definitely get what we call like higher, get a benefit from the high interest rate. This is where think if you think the way the financial the banking works, right? So they whenever remember when you get mortgage and everything, or you borrow a personal loan and everything from the bank, what they did, they're not actually coming up from their own money, so it is coming from the other people's money. So when you put your money for savings and everything, you got like, let's say like small interest rate, let's say 2%. So when they lend it out to the people, let's say to buy house and car or business, they're giving high interest rates. So we'll say, just giving example, tenancy will be let's say 2 or 3 or 5% above, right? By having increase of that interest rate, it help it help the banking to actually charging more. Makes sense. So indirectly, it will increase the what call like profit margin. The earnings and everything will be looking a lot better. But the other things is this is something that we just realized as well. With all those things like Robinhood traders and everything, we got more people that doing day trading and everything. The brokerage company, like probably not using the interactive broker because they're discounted discount broker. So think about like TD Ameritrades or other company, right? A lot of the broker will normally the tendency will get the money from what we call a margin cost, right? So when you borrow the money to invest or like trade the stocks, they will charge there's a what we call like a margin rate. So the higher the interest rate, that means they can charge more. So this will increase the income to the brokerage as well. So this is probably like a good opportunity. I would say like a good sector to look at. So I'm not invested to any of the brokerage. So, but definitely is one of the sector that will get a benefit from it, right? And this is probably I would say like expected when you got when industrial, so manufacturing and everything, and also like consumer names like McDonald's, Pepsi, or Coca-Cola, and those the company that be able to pass on that cost into the consumer, which is a Walmart, for example. So they can do that, right? And the retailers, so the clothing and everything, the more expensive the material and everything, they'll be able to pass it on to the consumer. So these are three sectors that I would say like that increasing. Um, Financial, I got invested into financial. Industrial, I got some. The one that I start looking into, which is probably like around the retailers. Consumer names, I got some. The retailer, something that I look at. I'm just gonna spoil that briefly. So this, I start looking the company called Revlon. Uh, Sorry, not Revlon. My bad. Revolve. Group. They're selling also like women's clothing and everything. And there's another one which is I think probably a lot of guys know. There's a Playboy, Playboy, which is they start selling into the fashion and the retailers as well. They're not into the. I think they're still going to the sex toys and everything, but and Playboy mentioned and everything. I think they still do that. A lot of them they start into the high, more like branding for the clothing and everything. So I start looking into those companies. So yeah, so these three sectors that will get a benefit. So probably move on. If you see these benefits, the financial, right? If you see a lot of like financial company like banking, for example, they're the one that got also like still on the green stage, right? So the other company was like say the growth company, the software, the like Disney, Netflix, a lot of those companies definitely got impacted because with the market turbulence and everything. The one that also like will start picking up, which is probably around this, we start seeing the healthcare like stabilize and everything. We'll start seeing around the consumer defensive start going up again. Remember, like Coca-Cola was negative, Pepsi was negative, start going back up, right? So if we go back to the slides, this sector definitely will start having a lot of benefit when we start seeing the also like market start increase the interest rate. So this is probably the area that you want to keep your eye on and do more research on that one. Huh? All right, so moving on. So if this is just a quick summary of that chart, this is where we start seeing energy, financial, and basic materials. Basic materials where the commodity and a bunch of other stuff, right? If you see 3 months, the past 3 months, you can see the real estate, consumer defensive. This whole those company, if you look at it, there's a lot of those company. We a lot of those stocks. We already mentioned that in December and January, and a lot of those stocks are still applicable to invest until now, right? But of course, like, oh my God, like to do this, there's a lot of work, right? You need to understand the macro and everything to understand the money movement and everything. Of course, it's sometimes it's too much for a lot of new investor, right? But also like things that we should focus on is probably also like something that we can control, right? We can't control the interest rate, we can't control the inflation and everything, but also like something that we can control is how we react and how we're gonna take an opportunity, right? So the first thing that probably tips is we want to let the market do their own thing, right? As you well, like market doing zigzag, they can do inflation or not inflation or whatever that they want to call later on. Of course, we want to let market do their own thing. The one thing that we really want to focus on is this one. We want to buy the great company that's selling at the discount, right? And I'm a very big believer in investing into the also like a great company that's solving a real problems that actually giving a lot of value to many people. And when they got punished also like a drag drop down and that's selling at the discount, that's where you want to buy, right? So the things that we really want to focus is I think this is something I'll touch on to many of our students is we always let the shares to drop, right? Then once it drop, then this is where we want to take action. We want to buy when it get into our a discount zone or buy zone, right? So probably just a quick refresh, also like quick refresh with a gun on also like we'll quick refreshment or not refreshment. Sorry, come again. I'll explain briefly in terms of what we cover in the last webinar, which is this is the our timing system, right? So I'll touch this briefly. Our timing system is all about we understandable of the share price always zigzag, right? The share price always up and down, up and down. This is, as you can see, up and down, right? I think the most important, like I did mention previously, we want to let the share to drop and we want to find the opportunity to buy them, right? So by putting our timing system and everything, then we'll be able to figure out when to buy the shares, right? So also like this is probably something that we want to focus on, right? So when it get into timing, also like our buy zone and everything, we buy them. Once it reach our profit target and everything, we just get out, right? Or investment thesis change, then get out. So we probably say like the more time that you focus on one, the higher success that you probably have. So probably a lot of people, I think a lot of new investor when they come to our group before is like how many times that we can see the opportunities, right? Probably say like almost every month I can see or every week we can see there's an opportunity out there, right? As I just giving example with the current stage, we can we can see that. Or before that, this is just giving example, right? That's NVIDIA is one of the example that we got based on our timing zone. This is it's supposed to be we can invest in here, but at the time I don't have capital, so I invest into here. You can start seeing that the market probably this is around that June 2021. Now it's probably more than $500. So the prices actually moved more than 200%. By just following something simple, so like reach and repeat, right? Something simple, get to that, reach your profit target, and get out. Okay? So if you see that there's still a lot of opportunity in the market, right? You can start seeing this. The first one, which is Verizon. So you probably see similar pattern. I'm gonna repeat this. It get into our buy zone, probably good opportunity. Then if they're great company, then it's good time to invest. And current price is traded around that 56.92 cents. Uh, feel free to take a screenshot and everything here. Yeah, so if you look the next one as well, there's another one, Henry Jack and Associates. So JKHY, which is the ticker. So this is a company that provide also like a payment system, like also like financial system for the banking, regional banking and everything. So they are feeding our timing as well. If they are a good company, of course, do your own research. And if they are a great company, and feel free to invest into them. The next one, same pattern as well, Kimberly Clark. I would say like probably not many people know about Kimberly Clark. They want the one that company that do Huggies, the nappies, and the another one that they do is they are quite popular with the Kleenex as well, and of course they're quite big in terms of the industrial as well. Um, yeah, so same pattern, fit out buy zone. something that you can look at as well. Choo-choo. Same pattern again with Teladoc Health and fit our timing as well. So if you can see that there's also like more than three or four stocks that fit on timing, right? So it's not something that is only happened once in a blue moon. So it's been for a lot of our students, we can start seeing that almost every month. You if once you got the deposit in, you got money in, or you got cash, you can always find time to research and invest, right? So probably the last one is this Vertex Pharmaceutical. I'm gonna take today, which is today. Oh, sorry, what time is it now? Where's my phone? But I hope I still got time. So the Vertex Pharmaceutical. So I'm gonna take today. I'm gonna go through this briefly, and in terms of this company and what's this about. This is the company that I personally invested in. Uh, I'll explain. I personally invested in here. It was goes up, then it goes back down. Then after that, I just added more recently as well. So before it was getting profit roughly, I think in our booster roughly around 40 or like 30 or 40%, but I didn't take profit and it just got back up. So now it got into the negative for my option because it's going sideways for too long, right? But of course, with the latest news and everything, I'll share that what's the company is about. And this looks like still very good opportunity. So, all right, let's get into Vertex, right? What is Vertex Pharmaceutical? So just a brief explanation. Vertex is basically they are considered a global biotech, also like medical company. They invest and their focus is mostly in terms of create or we call it medicine for rare or life threatening or let's say life threatening genetic disease. Also like something that hard to detect. So they are very focused on those area and I think the wording here is like scientific innovation to create transformative medicines for people with serious disease. This company is not just, they have a lot also like multiple approved medicines, and one of their focus is disease around the cystic fibrosis. I'll explain what that is briefly later on. Vertex, of course, they're not just focusing on that one. They expand their pipeline into a lot more. They start having a lot of. I think this is probably something really cool. That something I'm really passionate about. This is where around their gene editing. So they start looking to genetic and cell therapies. So this is where they start looking in terms of modify the gene and using the drugs to modify the gene so people can get a good gene to fight this genetic disease. Cool. Uh, so explain briefly what is this cystic fibrosis, right? This is where called a genetic disorder that like it happened not just to adult, it happened to young kids as well. Some in also like younger than 12 years old and everything. So it's also like it's something it's hard to detect and it causes a lot of failure. When it causes failure, is they're not like a huge straight away. So it start decrease your function, lung and everything start decreasing slowly. And of course, is pretty much they are very close to what we call like a COVID as well, right? But this is hard to detect, and they need to do genetic testing and everything. And of course, it until now it's hard to find the cure, right? And this also like Fartech is one of the leader in terms of this drugs. So currently, their goal is try to treating like 90% of all that cystic fibrosis patient with their medicines, right? So they got like two big products on this, which is the I don't know how to pronounce it. You can see that Trikafta and Captrio. So there's two big also like two products they are monopolized in this area, and I'll say based on the recent news in the 2021 news, sorry 2020 news, they actually capture more than 50% of the market share, and the rest of they still like more than 30% of the market share, and also like something that they will capture very very soon. And the cool thing with that as well, they start capturing to the age more than above that 12 years old. So this is the only company, also like the first and the only company that able to treat that age range. So they are quite, also like they are quite big in terms of these cystic fibrosis drugs. And of course, they start waiting for the approval for younger kids. So once they got into that, they are probably say like the mark they are going to skyrocket, right? So the if you look the market size at the opportunity currently in here, this is the old news around 2019. The market size is around 3.89, right? Billion in terms of the dollar amount. And of course, if you start seeing the projection and everything, and it's still, I'm not sure how much this is now. They still have a lot of upside, right? In terms of the market and everything, this is just a North America. And if you think about Europe and everything, other countries, and those countries still trying to order drugs from these Vertex. And in terms of them, if you look in terms of the pipeline, right? These all one, two, three, four. These are all four drugs. This is where around the cystic fibrosis. This is already approved. These these two like Picapta and what's the other one? You see that here. So they're the one that very focusing. They are the one that also like monopolize the market. So pretty much also like the four drugs, they're capturing different area, different age group, different also like different type of the also symptoms and everything. So there's a very different area that they're targeted. So they are definitely trying to capture all those patients around the cystic fibrosis. All right. So the other things I'll probably say they still have a lot of pipeline in terms of not just in cystic fibrosis. They're looking into sickle cell disease, um, the other things as well, and of course there's a lot of disease that they try to treat is where around the rare disease or something is hard to detect, right? And this is around the development of the product. And there's something that I want to let you guys focusing on, which is this the one CTX001. This is very also like very promising progress with the uh, drugs. This is where for them to treat the sickle cell disease. Currently, there's a lot of big company out there try to treat this, and also like no company able to get success until even until now haven't got that success. So this company, Vertex, trying to do it completely different way than other companies. So the way they do it, they try to partner with CRISPR technology. So this is where you'll be able to modify the gene. So just briefly in here, so normally the people doing that, they do sickle cell disease. They can reduce the impact by doing blood transfusion and everything. So it's also like something that costly and is hard, and basically you're not fixing the problem, right? So what Artex doing is rather than just expand the lifespan, and the guy still able to get it. So what they did is they tried to come up with the drugs we call it gene editing drugs. This is where you can uh, create the isolation of the cell and looking for the good gene and try to inject that good gene into the people, right? Yanoto explain. Yep, I know that. I'll explain that briefly. So sorry, Yanoto asking like, do you know what happened to the company back on October 2020 when the share price dropped? So I'll explain later on. All right. So in terms of this is something that quite promising. Of course, the risk is because they are in the phase two, they are moving on the. I think they're moving on to the phase three, and very close to finish the phase three, and they will get. If they go through smoothly, they will get approved, and they will start selling that drugs everywhere, right? So currently they are on the clinical trial and everything. The risk is if someone mute, the risk is if they fail the phase two or they didn't go through the phase three, that means they will get a huge impact, and that means the share price will be dropping, right? But I'll probably say uh, could happen, but also like it could impact the market sentiment, also investor sentiment. But of course, they have the other drugs. Go back to here. They got the other drugs that's still in the good side, right? So they're not focusing on just like one drugs. They have this cystic fibrosis, which is all got approved like last year, and they are doing amazingly well. All right, so they start capturing the market, they start monopolizing and everything. So they start getting a good momentum on this drugs. So if this is fail, I still have a good confidence with the other drugs that they are making good progress. But however, if they in the CTX001, based on the latest investor news and everything, they are making a huge progress and the speed is crazy. So the normally from phase two to phase three, they can take probably like 4 to 6 years. They're able to done it within like 2 years, right? So the speed and everything is amazing well compared to their competitors. So in terms of the progress and everything, definitely ahead against the competitors. So this is probably something that you want to monitor and look at as well. Um, so in terms of the fundamental, the numbers and everything, I put the competitive advantage as one, which is that they are monopolized the market now. They are doing amazing well in terms of those market. I put the score as 9.6 around the EPS. If you see that I put the new things in here, I think for students, if you already make a copy from the old tools, I'll probably create another copy. So I just add a few things here and there, try to fix the bugs and the problems. So I start adding this revenue, so it will give the indication, make sure that the revenue is increasing. If you can see Vertex actually revenue increasing, of course you can start seeing the Vertex like the EPS drop. This is probably say expected during that time. And net margin, profit margin is doing well. Cash flow is growing amazingly well. They got a lot of cash. Then also like they're very efficient managing their money. Also like this is one of the company have I would say very small debt, right? Of course, I wouldn't say like debt is bad. Sometimes you have debt to keep for you to keep growing, to focus on merger acquisition or like um, get the manufacturer or a factory is still good to have debt. All right. So current ratio represent like how much money that you have or how much cash that you can sorry, how many years that your cash can pay all those expenses, short-term obligations, right? So pretty much here they have almost have more than 4 years to cover. If they receive no revenue, they still can survive for next 4 years. So pretty much they are okay if we look in terms of the for CTX001, which is sickle cell disease drugs. If they took longer, let's say 2 years or another year, right? They still be able to survive without that CTX got approved, right? In terms of valuation wise, so if I use the moderate growth rate of 72%, right? The fair value is roughly around like $744.38. So currently share price is like $214, right? Of course, looks unrealistic. Oh my god, like so high. Whether this company will get into like almost like 4 times the current share, right? So I'm going to use or call like also like very conservative growth rate, which is like 30%. So this is giving a fair value of like roughly around $300, right? So this is pretty much also like reasonable, and this is giving a discount roughly around 30%. So indirectly, I'm saying based on the growth valuation, this company is still trading at a discount of 30%, right? Right. If you look the chart briefly again, remember they used to trade it before roughly around $310. So it's not something that they never been to. Also, like this is something that they also like they can go back to that, right? So back to Yan question, why what happened to this 2020 of when the share price dropped? So one of the drugs they failed the clinical trial and everything. So one of I forgot the drug's name. So apparently one of the drugs causing the liver failure. So that's what happened. And after that they dropped. And also like at the time that's one of the drugs that got promising around that sickle cell disease. So remember like sickle cell disease they got like multiple drugs, right? And one of the drugs they have two approach. The one of the approach they drop it out. The another approach, which is this, the gene editing, the one that looks promising. They say, hey, this gene editing doesn't have the liver failure, actually giving better result and blah blah blah. And so that's the company focusing on as well. So they're not pursuing the old drugs. So by because of that news, they got a huge drop on that one. And yeah, so I hope that answer your question. Hmm. So Ida asking, very good analyst. Thank you, Ida. How did you get to know about this specialized company? I'll explain later on. It's very soon. So back to here. So for students, so this is the trade that we share to the group, and this is something that I would say like still good opportunity to enter. So we still be able to enter this booster call with that roughly around $62. So that means the cost is 6,200 US dollars, right? And the opportunity wise, if let's say the share Also, like if let's say they're going sideways for forever, let's say in until January 2023, so we only expect them to grow up roughly around 8% for us to get break even, to get all our money back, right? So it also like it's not something that hard to also like to get, especially they've been through that and they've done that as well. And even like 100%, they've been there as well. They've been there, so they've been there before in October. So it was like very good. I felt I was a very good opportunity, good timing, good consolidation. The option, the time value is very cheap, and also like time qualitative company is really good. Quantitative in terms of financial company doing amazingly well. Timing is perfectly fit. So ticking three boxes that we normally looking them, right? So yeah, so this is something that I just recently added in. Also like more. So I added in here, goes back to here, didn't close it. It was managed to get almost like 30%, but didn't close it. Go back to here. The reason I put 100% because I'm lazy to get in and out of the market all the time. So tendency of I let the market uh when I buy the booster or like stock and everything, I'll let the stock market to run. Probably like I will review it in the quarterly or yearly. So that's my style. Of course, everyone's different. You can adjust your profit target accordingly. Some students got like 50%, some students got like 80%. So I always say like get at least a minimum 30%. If you can't get it, don't invest into this company. Make sense? So oops, yep. From pretty much that's all the presentation today. So we cover pretty much around inflation. What, of course, that's so complicated, and we cover like in terms of briefly about timing system and how to pick that opportunity. And we found this opportunity, which is a Vertex, and yeah, and apparently it's amazingly a great company, and they trade at discount. So this is something that we remember we can focus on. So this is something that also like very passionate. That's something that we teach as well in our academy. So this Fatec is one of the company that we invested in. So to answer Ida question, how did you get to know about this special company? So Ida pretty much quite also like simple. So because we have the timing system, we be able to use what we call a screener, which is uh, the tools. So trading view got screener, you can use your interactive broker. You can pretty much there's a lot of company out there that provide screener. We have a specific criteria on how we pick our timing system. Then we enter that all the criteria into that screener, and also like every week or every month we just monitor that screener that will show the it's like hey, this is the company that doing amazing like fit our timing. Then I personally I will start looking into those company research quickly, and if it's ticking all the boxes, then I invested to them. So give me a sec, let me move backwards a little bit. So this is the tools that we got. This is quite automated. So normally we enter the ticker and everything. So everything will be automatically populated. Then we just enter this quickly so we can also like analyze briefly before we go too much research. So this is something that we normally do as well. Got into timing, we do quick analysis on that fundamental. If it's all ticking the boxes, we go in depth analysis on those company. Cool. So that's how we normally do it. So, which Jules mentioned good consolidation. Oh, lucky I mentioned the word as well. Yep, good consolidation pattern. Thank you, Julius. And Jan mentioned, do you consider the share outstanding in the past 5 years when doing booster as they keep diluting the shares? Okay, so in terms I'm not gonna say the words. So Yanato, so in terms of the past 5 years, in terms of the share outstanding and everything, so of course, personally, we're not looking into the share outstanding in terms of when we enter the booster, right? So we, in terms of the option, we are looking different criteria. So it's hard to I'll explain briefly. So in terms of the option, we're looking in terms of risk reward and make sure that we can get the reward that we expected. And of course, the time value not that expensive, which is the option price not that expensive. If that ticking the boxes, if the company doing well and everything, so the share outstanding and everything, like if they keep adding more shares, is probably something that I wouldn't worry too much. However, the one that I'm probably focusing on rather than that the issue or reduce the shares, the one that I'm pretty much focusing on, which is the insider transaction. if I personally start seeing a lot of the also like CEO, CFO, or like big C-suites, right? They start dumping shares a lot. So something that I'll probably worry. So indirectly, also like they will have also like diluting shares as well. So that's one something that we can consider. If they keep selling a lot, then something that I will worry. That means the management or the people inside of the company, people that are running the business or running the company, they're not confident with their own company, so they dump the share. So if you think about it, if the management not believing in the company, how the investor can believe into that company, right? So if that happens, something that I'll probably worry. Cool. So you just mentioned to the monsoon, yeah. If they got the phase three approved, passed the phase three and got approved and everything, okay, probably will skyrocket. All right. So if you see that, probably I'll sound like this is common pattern for a lot of biotech, which is the company that doing a lot of I will say like clinical trial, like multiple phases and everything. If you start seeing that, if the company good news, then of course they jump up. If the company not good news, they drop, and after that consolidate, like going sideways basically for quite some time. This is literally a year, right, before they jump. Literally, this is like 1 to almost 3 years. They jump. This is where the news about CTX, which is that CRISPR technology. Sorry, partner with the CRISPR technologies to do the gene editing. Good news jump up, right? Bad news with the phase two of phase one or phase two of that one of the drugs causing liver failure drop. Now it's going sideways. People just waiting for the CTX news or that what do you call that cystic fibrosis got more buy-in from other countries. Right? So any other questions so far with this Vertex or probably inflation? All right, sure. So let me move that. I'm gonna share a few updates here, right? So this is something that I've been since I moved to a new apartment. That's something that I've been thinking of, right? I want probably something I will do is I'm going to revamp this public Facebook group. So what you- what I'll do, the first thing that I'll do is I'm going to rename our public Facebook group. I'll explain briefly. So I'm gonna change that into more like not focusing on the total investor academy or anything. So it's more on focusing on general stock investing for like general people, right? So we're looking for stock investing for general for people that want to build generational wealth. So this is for focusing that we are going to focus on beginner and full-time investor as well. So in this Facebook group, the things that we want to build is we want to, I was gonna start more, I got a lot of people asking me to, hey, Henry, can you make the trade alert and everything? Not something that I want to do and charge people. So what I'll do is in this group, so I'll start providing the company analysis, how I analyze the company, what whether that there's also like investment thesis, why I enter into the position. So it's not gonna be trade idea or action. This is something that just for our students. So trade idea, I'll still share that in the Discord channel. So yeah, so mostly in the Facebook group, I'll share a few company analysis on why I invest into that company or what I'm thinking of that company. And the next is I'll probably say more active on the market views. If I know like market stock market quite fast, the news and everything, I try to reduce the noise that from the news outlet out there. So if I'll sound like it's just a noise and everything, I'll probably give more updates. I'll give my observation of the situation and everything quite actively. So I don't need to wait until I'll sound like this monthly webinar. Cool. So then, of course, if I found like good article and everything, I'll probably definitely will share more articles. Something that I read and everything. So I'll probably summarize a little bit there, here and there. So anything that related with investing, so at least it can help everyone to grow as well. And of course I'll try to put more video guides, so I'm kind of bring back a lot of that all free videos and everything back to the this Facebook group. So I used to move everything out to the different to the teachable, but now I'm gonna bring it back, so it's, everything is nicely concise in here. So yeah, so this is something that probably will happen soon. So we'll try to bring more value to the group, to the community as well. So pretty much that's yeah, that's the the last update that I probably have. So monthly webinar or let's say monthly assembly is still going to happen every month. So I'm still gonna keep on that Thursday, but of course, if you have feedback or anything, please let me know. So happy to consider them. Yeah, so pretty much that's all my presentation today. Sorry taking um an hour of your time. So yeah, so I'm gonna change this a little bit here. I'm gonna open this session like the time roughly around 10 minutes, probably like max 20 minutes. You ask me anything. Ask me anything. If anything that you think of, can be anything that related to the content, anything, or probably more than that. And cool. So if you shy, if you're not shy, if you shy can't unmute, then probably just type in the chat. If you if you, to be honest, it's better if you can unmute yourself and answer those questions, right? And yeah, so time for me to drink. Thank you, Anatol of the Analysis on the company. Can't wait for more on the Facebook. Thank you. So yeah, definitely if you have any like good company and everything that come to your radar, share with us. So happy to look into it and happy to discuss. Probably get that discussion going in the group as well. So yeah, thanks Ida. Appreciate. Thank you for your support. Thank you for coming tonight. Thank you, Marsha. So I think pretty much like almost 80% is student anyways, right? So probably briefly, right? I think few people still got JP Morgan, few people still got what we call Bank of America. Personally, I'm not rolling them. I'm still holding them. So for JP Morgan, I rolled them quite aggressively. So from just giving example, aggressive means I roll from one contract into multiple contract to two contracts, right? So Fiona done something similar. I think few students done something similar. So in terms of Bank of America, I'm just holding it at the moment. So it's now currently trading for probably like more than 180% profit. So I'm gonna hold it until it's expiry. Okay? So I'm gonna reassess until when the news coming up whether they increase interest rate or not. So if they do increase interest rate, then I'm gonna roll aggressively. So I'm just FYI. So it's not come as a shock to a lot of students. Choose. All right. Thank you, Eka. Thank you for coming. Thanks, Julius. Thanks, Jan.
Thank you.
Thanks, Steven. Thanks, Crystal. Thanks, Nat. All right, so pretty much everyone's good. So yeah, so of course, like if you're shy, if you're not sure to ask question now, feel free to reach out to me in the Facebook and everything's happy to catch up. Yeah. All right. If that's the case, thank you everyone for your time, and I'll say have a good night. I'll see you guys next week. Next week, next month then. Bye bye.
Thank you. Bye.